The honest truth. I want to talk to you honestly about what is happening in Dubai and the UAE right now. Not the official version, not the panic version, not the version where someone tells you everything is fine and do not worry. The honest version. From someone who has been on the ground in this market for the past 24 years. My name is Ben Bandari. I'm the CEO of Benco Real Estate. I'm ranked the #1 broker in the UAE by Arabian Business. I'm the star and executive producer of Dollar Listing UAE, a 2-time Emmy Nominated reality show. And I have done 27 billion in real estate transactions in this city. I've also lost half of my wealth back in 2008 when the subprime market and crisis happened globally. I built a company during a global pandemic when every rational person told me I was crazy. And right now, I'm watching missiles being intercepted over the city I've given the last 24 years of my life to. So when I say I'm going to give you the honest truth, I mean it. Because I've lived through enough of this market to know the difference between a crisis and a collapse. And what are we facing right now is not a collapse. But I'm not going to stand here and tell you everything is normal either. It is not. And you deserve better than that. So today, I'm going to walk you through 5 things. First, the reality of what has actually happened on the ground. Second, what the data is actually telling us, not what the headlines are saying. Third, what the stock market drop actually means and why most people are misleading it. And fourth, the history of this market and what it tells us about right now. And fifth, what I'm personally doing, what I'm telling my private clients, and what I believe the smart move is in this moment. Let us get right into it. Let me start with what actually happened, because I think it's important what we say clearly without dressing it up. On the 28th of February 2026, following US and Israeli strikes on Iran, the Islamic Republic fired missiles and drones at the UAE. As of today, over 2,400 projectiles have been launched at this country. The vast majority, more than 95%, were intercepted by UAE air defense. But not all of them. There was a fire at Burj Al Arab. There was a strike that affected Dubai International Airport temporarily. There was damage at the port of Fujairah. Debris fell in residential areas. 12 people unfortunately lost their lives, and 190 were injured. Those are not just numbers to me. That is the city I live in, the city I built my life in, the city my business is in. I'm not going to stand here and tell you that nothing happened. Something significant happened. The UAE and Dubai specifically has had its sense of invulnerability tested in a way that it has never before in modern memory been tested. Dubai spent decades and billions of dollars building a reputation as the safest, most stable business hub in a volatile region. The reputation has been shaken. I will not pretend otherwise. You're not a child. You do not need to be protected from the truth. The safe haven narrative that Dubai sold to the world and that brought billions in international capital to the city is now in a period of rebuilding. Some buyer categories have paused. Some international investors are adopting a wait-and-see approach. Transaction volumes in March were down compared to a typical early year period. Site visits were canceled, signings were delayed. This is real. This is happening. And anyone who tells you otherwise, anyone in this industry who is posting content pretending this is all completely fine and you have nothing to think about, is either not being honest with you or is not paying attention. This is chapter 1, the reality. I said it out loud because you need to hear it from someone in this industry who is willing to say it. Now let me show you why the reality and the crisis are 2 very different things. Now let me talk about what the data is actually saying, because there's a very big difference between what is happening in the headlines and what is happening in the real property market. And most people, including most professionals in this industry, are confusing the two. Let us start with where the market was before any of this happened, because context matters enormously right now. In 2025, Dubai recorded almost 917 billion in total real estate transactions. That is not a typo. 917 117 billion dirhams, the highest in Dubai's entire history. Not the highest in 5 years, the highest ever. In 2025 alone, Dubai recorded over 200,000 residential sales transactions, a figure that is 464% higher than 2021. End user demand was driving the market, not speculation. That is a fundamentally different and more stable position to be in than where we were in 2008. Then January 2026 happened. And even as regional tensions were already beginning to build, because remember, this conflict did not come from nowhere. There were months of escalating signals. January 2026 and in Q1 2026 overall, which includes the period when the conflict broke out, Dubai recorded 47,996 sales transactions worth 176.7 billion. That is a 5.5% increase in volume and 23.4% increase in value compared to Q1 2025. Let me say that again. In the first quarter of 2026, a quarter that included the outbreak of the most serious regional conflict this country has faced, Dubai real estate did 176 billion in deals. Now, what about prices? This is the question everyone is asking, and here is the honest answer. Physical property prices in Dubai, actually bricks and mortar, are approximately 4 to 5%, maximum 10% below their January 2026 peak. Some luxury segments are showing 5 to 15% off the recent highs. The mid-market has barely moved. That is it. 4 to 15%. Not 25, not 30, not a crash. A modest correction from an all-time historic high. Now let me tell you about rental yields, because this number has not moved. Not because of the conflict, not because of the sentiment, not because of anything. Rental yields in Dubai right now are between 6 to 9%, depending on the area and the asset type. Business Bay, JLT, Dubai Marina, 7 to 8% gross right now. London is 2.8%. Singapore, 3.5%. New York, 3 to 4%. Hong Kong is 2.2%. And all of that income, zero income tax, no capital gains tax, no inheritance tax, and your money moves freely in and out because the dirham is pegged to the US dollar and has been since 1997. That peg has not moved. It will not move. These are the numbers that matter to a long-term investor, and not one of them has materially changed because of this conflict. The income generating case for Dubai property, the fundamental financial logic is completely intact. This is chapter 2, the data. Now let me explain the number that everyone is misreading. I need to talk about the number that everyone keeps sharing because it is causing real confusion and it is leading some people to make decisions based on misunderstanding. The Dubai Financial Market Real Estate Index, the DFM, dropped approximately 21% from the moment the conflict began. Some analysis put it closer to 30% in its sharpest fall. That is the number going around, and it is real. It happened. I'm not disrupting it, but here's what almost nobody is explaining clearly enough. The DFM Real Estate Index is not measuring property prices. It is measuring the share prices of publicly listed real estate developers, companies like Emaar Properties, like Aldar. It is the stock market index, and stock markets react to sentiment, to fear, to news in real time, often within minutes of a headline breaking out. Physical property does not work that way. When you own an apartment in Dubai Marina, it does not lose 21% of its value because Iran fired missiles yesterday. Property moves slowly. It takes weeks, months, sometimes, for a sentiment to translate into actual transaction prices. And even then, as I just showed you, actual prices are off, I think, 4 to 15%, not 25, 30, 40%, which headlines that people are talking about. Think of it this way. Imagine a company that owns 10,000 homes. That company's stock can drop 30% in a day because traders are scared. But the actual homes, the bricks, the walls, the leases, the tenants paying rent did not drop 30%. They're still there, still worth what they were worth. The DFM exchange itself was actually closed for 2 consecutive days when the conflict escalated. That is how volatile the listed equity markets was. That closure itself was a sign of how differently regulators treated listed stock versus physical real estate and physical assets. Physical real estate transactions never stopped. The Dubai Land Department never closed. Deals continued to register. Now, there's another number I want to mention honestly, because I think you deserve to hear it. Some developer bonds, specifically from Benghazi and Omniat, entered distressed territory during the worst of this conflict. Spreads moved past 1,000 basis points. That is worth being aware of if you're looking at off-plan with those developers specifically. The key context is that those bonds do not mature until 2027. Both developers have strong banking relationships. Most analysts do not expect defaults, but I'm not going to pretend that number does not exist. This is the kind of honesty I'm talking about. I will tell you what is good, what is real, and what needs watching. All three. So when you see a headline saying Dubai real estate is down 21%, you now know what that actually means. It means developer stocks fell 21%. It does not mean your apartment fell 21%. It does not mean the villa you own on the Palm is worth 21% less than it was in January. What it means is that the listed investor sentiment was extremely negative for a period, which is entirely understandable, at which, as I'm going to show you in the next chapter, has happened before. And every single time, it has recovered. I've been in Dubai real estate since 2002, and I want to walk you through what I have actually seen, because the pattern is important. The year 2008. We had just sold a building in Waterfront. 190 million dirhams was my commission. The developer who had our money and was about to pay us, they had just disappeared and vanished. My personal share of that deal was gone within 1 week. The subprime market and the global crisis had just hit us hard. I was 30 years old. I thought I had made it. And then, like that, it was gone. Dubai property prices ultimately fell by more than 50% from their 2008 peak. 50%, not 4, not 10, 50. I did not leave. I did not give up. I recalibrated. I survived, and I learned. By 2014, Dubai property values had doubled from their 2008 lows. Doubled. The people who stayed and held their positions did not just recover, they won. They won significantly. The people who panic sold in 2009 into the worst of the market, they did not get that recovery. Then came COVID, March 2020. The entire world shut down. I made a decision that surprised almost everyone who knew me. I opened Benco Real Estate. Not because I was not scared, but because I had learned in 2008 that the best companies, the ones that defined a generation, are built in the hardest moments. When the field clears, whoever is still standing wins the ground, which means the strong only survive. From 2020 to 2023, Dubai property rose more than 40% from its COVID lows. And then 2023, 2024, and 25 became the biggest sustained boom the city has ever recorded in anything that I've ever experienced, culminating in that 917 billion transaction year I mentioned earlier. The people who bought during COVID, who made the move when everyone else was terrified, made extraordinary returns. Not because they were lucky, because they understood the pattern. Then came Russia, Ukraine in 2022. Suddenly, Dubai saw a wave of Russian capital seeking a safe home. The market accelerated. The crisis that seemed so destabilizing for the world, it actually increased Dubai's appeal as a neutral, accessible, and tax-free destination. Crises do not always push capital away from Dubai. Sometimes they push capital toward it because the world needs somewhere to put money safely. And for 24 years, Dubai has been that place. Now, I want to be honest with you about what is different this time. What is different is that this conflict is not external to the UAE. Missiles actually hit UAE soil. That had not happened before in modern memory. And that has genuinely challenged the psychological safe haven narrative in a way that a market correction or a pandemic or a conflict in a neighboring country did not. I will not pretend that the damage to Dubai's perceived invulnerability is zero. It is not zero. But here is what I will say. The structural case for Dubai, the dirham peg, the zero tax, the population growth, the D33 economic agenda, the free capital movement, the geographic position, the infrastructure investment, none of that has changed. Not one element of it. A city's reputation for safety can be rebuilt. It has been rebuilt before by other cities. After far worse, the underlying economic architecture of this place is world-class. And that does not disappear because of a conflict that his defense systems handled with 95+% interception. Dubai has served every crisis I've been here for. Everyone. And every time, the builders who stayed, they won. Now let me tell you what I'm actually doing. Not what I'm saying to make people feel better, what I'm actually doing in Dubai and the UAE. Benco Real Estate has not paused. We have not slowed down. We have not stopped answering the phone or responding to inquiries. In the last 3 to 4 weeks, during what has been the most intense period of this conflict, my team has shown properties, continued negotiations, and moved deals forward because our clients need us. Not in spite of the crisis, because of it. When things are uncertain, people need a trusted advisor more than ever. And if I go quiet when things get hard, what does that say about everything else I tell you? Now, what am I telling my private clients right now? Let me break it into 3 groups. For clients who are long-term cash buyers with a 3 to 5 year investment horizon, I'm telling them this is a window, a modest window. 4 to 5% off a historic all-time high is not a crash, but it is better entry than January. The yield is intact, the structural case is intact. If you were going to buy in Dubai anyway, the case for doing it now rather than waiting for clarity is stronger. Because clarity in a crisis never comes before the prices move. By the time everyone feels comfortable again, the window has closed. For clients who are existing property owners with no leverage or pressure, I'm telling them to hold. Do not sell into sentiment. You're not selling a stock that trades on emotion. You own a physical asset. In one of the most in-demand cities in the world, the population of this city is not declining. The rent is still being paid. The yields are still there. Give it time. The sellers who panic sold in 2009 at the bottom of the 2008 crash, I watched them do it. I watched what happened to them afterwards. I'm not going to let my clients make that same mistake. For clients who are sitting in off-plan commitments, particularly with smaller developers, I'm telling them to do their homework on the developer's financial health, their escrow arrangements, and their construction timeline. Off-plan carries more risk in the environment than ready property. That is true. Know who you are buying from. Know that your money is in a protected escrow. And if you have concerns, call me. This is what we're here for. Now let me tell you what I personally believe about this market over the next 12 to 24 months. I believe the conflict, however long it lasts, will be resolved. It will end. And when it does, the underlying engine of this city, the innovation, the infrastructure, the ambition, the diversity of capital, the visa programs, the tax environment will reassert itself. Dubai does not need the conflict to end for people to still want to live here. People are still here. People are still arriving. The restaurants are open. The offices are open. Schools are running. Life, real daily life, has not stopped in this city. What has paused is confidence. And confidence in markets, in cities, in economies always comes back when the fundamentals are strong enough. And these fundamentals are strong enough. I've said publicly before, you are only as relevant as your last transaction. That is true in real estate, and it is true right now. I am still transacting. Benco is still moving. We are still here. And so is Dubai. I want to close with something that I've been thinking about a lot in the last few weeks. I came to the city in 2002 with $510, 510 Canadian dollars to be exact. I slept in a shared apartment. I turned down a salary and bet everything on commission. My mother flew out and challenged me, looked at how I was living and said, "Is this really the life you want?" And I made my choice. I stayed. I bet on Dubai. And Dubai bet on me. I've been through 2008. I've been through the crash that took half of everything I had built. I'd been through COVID. And now I'm watching missiles intercepted over the city that gave me everything. And I'm still here. Not because I'm naive, not because I'm not paying attention to what is happening, but because I know from lived experience, not theory, that the builders always win. The people who showed up when it was hard, the people who kept serving their clients when it was easier to go quiet, the people who bought when everyone else was selling and held when everyone else was panicking. Those are the people who defined what Dubai became after every single crisis it has ever faced. I intend to be one of them again. If you have questions about your specific property, your specific investment position, what I would do in your situation, reach out. My team and I are here. That is what Benco is for. And if this video gave you clarity that you have not found anywhere else this week, share it with someone who needs it. Because I think there are a lot of people right now who need to hear an honest conversation about what is actually happening. Not the headlines, not the panic, the truth. Thank you for watching, and I'll see you next week.